My name is Jan Miczaika. I'm a partner at Holtzbrinck Ventures. HV is one of the large European early stage investors with offices in Munich and Berlin. We invest pretty much across the internet, if you like. Started out doing a lot of e-commerce investments, many of which have turned into household names like Zalando, Groupon, Delivery Hero. And now we've broadened our investment focus to a lot of B2B, software as a service, mobile, consumer, kind of everything which gets our attention. So I'll be talking about that in half an hour or so. I believe the underlying blockchain technology is something I'm very, very interested in and very bullish about, because I think this decentralization and immutability opens up completely new business models. However, obviously the ICO craze 2017 and kind of going into 2018, you saw a lot of retail investors, people putting in their own money, and I would say 98% being scammed. And I believe now we're in crypto winter. A lot of the scam has been washed out. Unfortunately, also a lot of people lost a lot of money. However, now I see much stronger teams than before working on big problems using this technology. I'd say these two forms of funding are not competitive, because I believe in the beginning you could do an ICO just based on an idea, and that's good for smaller projects, but it doesn't really work for more ambitious things. So I believe the new trend, what we're seeing, is people building at least an MVP or kind of some version to show. And for that, VC funding is generally helpful. Also because besides the money, we can obviously help in setting up the company, giving advice to the entrepreneurs, opening our networks, these kinds of services. And then once the company reaches a certain point, I believe good companies have a variety of funding options. It could be to take more VC money. It could be to do an ICO to generate tokens and maybe sell these tokens to institutional investors or to private individuals. And I believe there are business models which generate from being very open. Ethereum is not strictly a business, but by putting these Ethereum tokens in the hands of developers, obviously it drove adoption. However, I believe there's other companies where maybe having 10,000 mini shareholders is also not so much fun for the CEO and maybe also not very helpful. So I'd be very open about it as our companies develop to discuss ICO options the same way we sometimes discuss crowdfunding options. Definitely. If you think about a VC, what we do is we take money from large institutional investors, pension funds, insurance companies, etc., try and find the best projects, invest in them, do a deal, and then support these projects. And that function won't go away in my mind. And then for us, using tokens, using ICOs as a tool, the same way like equity and debt. But let's say an insurance company from the US who say they want exposure to European crypto, they won't go out and try and find projects on their own. That's kind of the job we do. And so for me, investing in ICOs, before ICOs, etc., is actually complementary. And it's a tool in our toolbox, and it's not really competition. Well, we have done one investment in a company which uses blockchain technology heavily, Upvest in Berlin. However, that was an equity investment, and we're also exploring how to invest into tokens. It has some legal and regulatory requirements which need to be fulfilled. You have to remember fund structures are built to last for many years, so changes are not overnight, but I believe every large professional fund out there is trying to answer these questions quickly. It depends. That's actually a very good question. It depends what kind of money you're looking to attract and who you want to bring in as investors. So we tend to deal with a smaller number of very large LPs, very large investors who invest into our funds. And on the other end of the scale, obviously, venture capital and private equity are not open to individuals per se as an asset class. You could argue that by buying a life insurance, probably 5% of your money is ending up in VC. But now let's say I couldn't go to Benchmark or Sequoia and say, hey, here's $5,000, please take me into your fund. Question is if the top performing VC funds want individual kind of retail investors or not. I think there's pros in having a wide investor base. If you want to launch new products, you instantly, get traction, etc. On the other hand, there is obviously the overhead of dealing with thousands of people, etc. So I'm curious to see if we'll see large tokenized funds out there.
We are curious as well.
There actually is one, just an example, the BaFin, the German financial regulator, approved a tokenized raise for Bitbond for 100 million. But it's debt. But in a way there, if you buy into the Bitbond STO, you're in some ways buying into a tokenized fund. So yeah, maybe that's a start.